Hello, and welcome to Balance and Bottom Lines with Rebecca. Today's episode is all about navigating the journey of buying your first home. Joining us today is Daniel Stevens, Closing with Daniel, empowered by Nexium Mortgage. Daniel is a proud husband to Olivia and father to Eleanor. He's a problem solver through and through. Daniel believes mortgages are not a one-size-fits-all. He takes time to find the right fit for each situation. Welcome, Daniel.
Thanks for having me, Rebecca. I'm excited to come on the podcast and just kind of chat about, getting started on your first time buyer journey.
Yes, awesome. I'm super excited about today's episode topic because I remember how scary it was when I went to buy my first home. And I was 21. I was also pregnant with my son at the time. So it was an exhilarating but yet daunting process, from the financing to the home inspections. And at that point, I was in the lending game, but only doing retail financing and had no clue. But thankfully, I knew a little bit about credit, but had no clue about what I was in for.
Mm.
So this is going to be an awesome conversation. So, as a first-time home buyer, it's crucial to ask your mortgage loan officer a range of questions to ensure that you fully understand the mortgage process and make informed decisions. Daniel, if someone is interested in purchasing their first home, where do you recommend they start?
If we're getting ready to start talking about buying your home, it's time to get a pre-approval. When you're getting into the pre-approval, we're digging into everything. We're getting a credit score. We're looking at the income, kind of your work history, what that looks like. And that's going to give us the best idea on what you can afford moving forward. Obviously, we don't want you going out and looking at homes and falling in love with something if that's not in your price range. So it's definitely all about getting that pre-approval up front.
Yeah. So you mean I need to see what I can get approved for first before I shop? I shouldn't just go out and just start looking at houses and contact my realtor or reach out to a realtor and just start going from there?
Yeah, probably not. What I get a lot of is they think that they want to buy a house in a certain price range, and then once we kind of go into everything, not only are you taking out a loan and you're going to have your principal and interest payment that you're making. A lot of people don't think about the homeowner's insurance or the property taxes or the mortgage insurance and how that will affect their payment. And now all of a sudden they were saying, "Hey, we're comfortable buying a house at $300,000, we think." And now you're like, "Well, here's what a payment on a $300,000 home looks like," and you're usually walking it back after that because they're like, "Oh, I'm not comfortable with that monthly payment. So let's figure out what your payment, where that's comfortable, and let's tell you what your purchase price looks like at that."
Yeah. Yeah, that's a really good point. And another thing to take into consideration too, that, when I was that 21-year-old, buying my first home, and granted that may be kind of young, it doesn't matter when you start, but we were pregnant and it's just something that you do, it's time to get our house. Is you have to furnish that home.
Mhm.
So the larger home that you're purchasing, if it is a $300,000 house and we're talking, square footage may be a little bit more than just a smaller ranch size house, you have to furnish it. So we're talking about your kitchen table, your living room suite, decor. And so that's another piece of that financial, you don't want to spend $300,000 on that house and then you can't afford to put furniture or you're sleeping on an air mattress, so that's another thing to take into consideration, that I think we get so uber focused on the house and super excited that we forget there's going to be additional expenses afterwards. So yeah,
Yeah.
yeah. And then if you're financing those additional expenses on, 6 months, same as cash, or 12 months, same as cash, those payments do come up. And if that balance is not paid in full, then you're getting hit with the interest, and the interest goes back to day one on the original amount you financed. So it's just a lot of things to take into consideration. Do you run into that a lot, or hear people talk about that?
Yeah, I get a lot of that, and I would definitely like to remind people that if you are in the process of buying a home, please do not open other lines of credit while you're in the process. If you do, that could completely tank your pre-approval, and that is never a fun phone call to have. Is, hey, I know we were approved for this, and you guys were out shopping or even under contract for it, but when you went and got that financing for you wanted a king size bed for your bedroom, well, that just made something happen, and now the deal's going to fall apart because you're no longer approved. And it's just based on, your debt to income. If that's pushing the limits, you never know exactly where you're at. That could be something that can just put you over the limit there.
Yeah. So I wouldn't want to go out and buy that new car either,
Oh
right?
no, please, no cars. Nope, nope. Let's get the home first. Let's get you closed on that. And then if you want to go and talk to someone about purchasing a car, I will personally take you over to somebody.
That's a good point. I'm glad you brought that up because that was going to be my next. You stole my next thunder. So that is an important piece. Yes, opening new credit accounts while you're in the process of buying a home. That's definitely important. Probably number one, maybe.
Yeah, I would say that's number one. And one of the small things that comes up now, it's very popular in the last couple years. It's all of those buy now, pay later. Your Affirm or your Klarnas, anything like that, where you're setting up some sort of a future payment. Those are looked at potentially as new forms of debt, depending on what you are buying with those. So yeah, if you went on and purchased your bed with that kind of a method, if you took on $2,000 or $3,000 for a bed and a frame and all of that, it's still going to be looked at as debt, and it could still hurt you.
Yeah, that's a good, excellent point. So what does the pre-approval process look like?
Really, the pre-approval process is just us sitting down and really going through everything. Like I said, we're getting that credit report. We're getting pay stubs, W-2s, bank statements, show us where the money's coming from. And that's us taking our time to kind of sit down and go through everything and figure out, are there any red flags? Are there any, potential issues with this application? And then that's when we come back and we'll say, hey, based on the information that we have collected, here is the number that is comfortable for you all. And then at that point, it will become more of a conversation of, oh, this is what you can afford on paper. Well, if you're not comfortable there with the payment, there's nobody that's going to force you to take that on. So that's when we have a little bit of back and forth where it's like, well, I was hoping that we could stay in this range, 15, 1600. Okay, well then let's figure out what a pre-approval looks like at that payment. And then from there, you actually would get with the realtor, and that's when you would start going out to look at homes that are in that price range.
Oh, okay. Nice. Nice. Okay. Are there any special programs or incentives if I'm a first time home buyer? Any that you are aware of?
Yes, there are several. I have a handful of lenders that do offer some special financing for first time buyers. One of the top programs right now is there's a 1% down conventional loan. So basically, they're giving you 2% of the down payment, and you just have to bring the 1% of it. So, depending on what we're talking about, if we're, $200,000 purchase price, they're essentially giving you $4,000 towards your down payment to get into a new home. So
Wow.
that's a great affordable option. There's all kinds of down payment assistance programs that I wouldn't, you know, they're great if you need them, but not everybody needs them. And part of you taking on a down payment assistance program, there is usually somewhat of a downside. And that downside would usually be you're taking on a slightly higher rate, but you're taking on that higher rate because somebody is giving you money for your down payment or for your closing costs. And depending on the situation, you might have to pay those funds back when refinance or sell your home if you're only going to be there for a short time. So all of those things are things that I would look at and kind of walk you through and say, hey, here's this option, here's that option, and at the end of the day, like we'll figure out what's best.
Yeah. I'm glad you brought up down payment because that's a great, question. And I'm sure one that you get quite a bit, what is this going to cost me? How much am I going to need, or will I need to bring money? So that's super important. So when it comes to down payment, and I know, this could be loan specific, but how do you go about, is there typically, you probably offer a wide range of different type of products. And so, as you mentioned, it's not like a one size fit all. But what are your typical requirements for down payment?
If we're looking at somebody trying to get in a home for the first time and they're really trying to do it for the cheapest out of pocket, there's two things that come to play. One, if you're looking at doing a rural property, we would look at doing a USDA loan, which they don't require a down payment. A lot of people think no down payment means no money to close. You still have closing costs and things like that that are associated, but you're not actually having to pay a down payment. So all in all, you're probably getting into a new USDA home for, $5,000-$6,000 total. If it's not a USDA eligible property, or you're not wanting to live out in the country, you're wanting to live closer to the city, then the number one thing we're going to look at then is if you can get approved for a conventional 3% down. Fannie Mae and Freddie Mac, which are two of they're the big dogs in the mortgage world. So they both have a 3% down program. It's just going to vary depending on what your income is. And then, what's your goal for this home? Is this the home that you're going to be in for a handful of years? Like, are you a single adult that's going to be living in this as a starter home? Or is it your family's first home? You and your wife or you and your spouse just bought this home and you're going to be there for 10 years. Well, then there's a difference in what kind of program we're going to look at or which option is going to work for you. And then if you're not approved for the conventional just based on credit or whatever it might be, your debt to income might be too high, something like that. Your next step is going to be looking at an FHA program. FHA is going to be the friendliest when it comes to credit score. And they're going to be a similar down payment. You're looking at 3.5% for an FHA loan. And that's, you can get into an FHA loan for all the way down to a 500 credit score. So, yeah.
Wow. So really, I mean, any and everyone, if you're looking to buy, and maybe you have some money and you have that credit score that's at the 500 range, you're not out of the game. You can still buy that house and start, create your investment and stop putting money in someone else's pocket. So yes, that's awesome. Excellent that you brought that up. And the different, down payment, closing costs, two different things. So what are closing costs? Those, and it's important that we see, what closing costs we have. So the breakdown of any fees that you would have, appraisal, title, origination, escrow, so your taxes, insurance that Daniel mentioned, that's important too. Because that's money you're going to have to bring to the table. You will have to pay your homeowner's insurance. You will have to pay your property taxes. In Indiana, we are in the rears with our taxes. So that's another conversation in itself. But yes, I do want to touch on, let's talk about a hot topic. And, over the last couple of years, it's been interest rates.
Mm-hmm.
In different products, maybe different rates are applicable to those different products, but what are you seeing in the market right now?
So everything has been pretty steady for most of the beginning of this year. We're still hovering right around 7%. I know a lot of the experts were hoping that rates were already going to be cut or have a cut date in mind, but everything is kind of how it is, and at least it's consistent. At the end of 2023, it was very volatile where we would have good weeks, we would have bad weeks, and it just seemed like, it's harder to make a educated decision on what you're going to do when there's so much volatility. So now that I think that we are at least in some sort of consistency, it's bringing people back into the market. They're comfortable. They know where the rates are at. It's not going to necessarily change while they're looking for their home. Um, but hopefully at some point in 2024, we will finally receive that rate cut that we have been looking for a year now. Some people are saying it could be later this summer. Others are a little bit more pessimistic, and they're saying it might be the fall before we actually receive the first one. But I think that if you are in a position to buy currently, getting in the market sooner rather than later, you're going to avoid more competition when those rates do come down. There's a lot of people sitting on the sidelines, and that's what they're waiting for. They're waiting for that payment just to be a little bit more palatable. And if you can get in now because you are pre-approved and your situation is ready, then let's go ahead and do it.
Yeah, yeah, good point. I'm going to flip it a little bit and say, there's no time like the present. And even though rates may be in the sevens, at this point, that doesn't mean that you can't refinance. Daniel can, refinance you. So if you are in the market to buy your first home or buy a home in general, you can always refinance. It's not like that option is not on the table. So when rates do come down, but at least you're already in, you found the home of your dream. You can go ahead, your dreams, you can go ahead and purchase it. And then you can always refi with Daniel. So, it's perfect example. It's a win-win,
Yep.
Win-win for you. You got in the home that you found that you absolutely love. It may have not 100% been the rate. And, sometimes, rate, it may matter a little bit, but, let's look at the big scheme of things. That's what's important. You're turning your home as an investment, so you're not putting money in someone else's pocket now. You actually have an investment vehicle. So super important. But yeah, that's a great point. So let's say that I've gotten pre-approved. I found a realtor. We found a house and we've made an offer. Our offer has been accepted. So I'm kind of skipping maybe some steps ahead here. Our offer's accepted. What does the closing process look like? And what does the timeline look like?
So the next big step for you when you're going through that is we're having to chase down any remaining documents that we have. And then we're sending you in after your accepted offer, we're sending it into underwriting. And basically the underwriters are the ones that come through with the fine-tooth comb and just look for anything that could be a potential issue from the initial application that we took. And they're the ones ultimately that are going to make the decision on your approval. While we are going through underwriting and handling that, you work with your realtor to set up your home inspection. And that's when they're going to come out and kind of let you know if there are any major flaws with the property that, might have been unseen or masked a little bit. And then the next big thing is going to be the appraisal. And a home inspection and an appraisal are not the same thing. The home inspection is going to be more about, do things work or operate as they're supposed to, any flaws with the property, whereas an appraisal is more about the value of the home. So is the home that you're buying worth what your contract says it's worth? And that's going to be the biggest piece of the puzzle. And then from there, once we get the appraisal back in and everything checks out fine, your underwriters will issue you a clear to close, and you're closing at the title company. Most of the time in this current market, just because the lenders aren't swamped with loans to do at the moment, we're looking at less than 30 days to get you into a new home.
Nice. Okay. So that's pretty quick, really.
Mm-hmm.
So that's awesome. Yeah. So some key factors to take into consideration, first is your budget and your affordability. So just kind of highlight that. Daniel's going to be able to determine how much you can afford and spend on a home, considering factors like your income, savings, existing debt, future expenses, as we've mentioned, like those purchases to furnish the home. And remember to factor in the taxes and insurance that Daniel mentioned, any maintenance and utilities. And, we didn't touch on this, but I do want to highlight it. having that little nest egg for emergencies. Um, and I don't know if there's a certain amount of months that you recommend. I like to tell people it's nice to have a savings if you have 6 months to a year where it would make your house payments or pay your bills if something were to happen. So maybe taking that into consideration too. I'm not saying that's a make or break deal, but maybe working towards that once you've completed the process of buying your home, starting to try to build a nest egg
Mhm.
on top of all the other things. So, no, that sounds like a lot, but it's something to take into consideration. If an emergency does happen, where are you going to pull that money from? And then we didn't touch on this, but location. And this is maybe more of something that you would get into with your agent, your real estate agent. But yeah, choosing a neighborhood that suits you, your lifestyle, your preferences, your needs. Is it close to home or close to work? Is it close to work? If you have young children, is it near schools or schools where your kids go to? Amenities, public transportation, safety, community atmosphere. Do you feel comfortable? So location's something, super important. Daniel, I don't know if you talk much about location per se with your clients, but, just something at least to put in your mind, if you're listening.
Mhm.
And then the type of property that you're looking to purchase. Do you just do single family homes or can you do condos and townhouses?
So yes, I can do pretty much any property type, manufactured housing, townhomes, PUD homes. I mean, if you wanted to buy an apartment building, I could even help you try to purchase an apartment building. It's kind of whatever you might be looking for. I have lenders that will help you out with that.
Oh, wow. Okay, nice. So very wide range,
Hmm.
variety there. Awesome. That's great. And then with condos and townhouse, you may have, especially with condo, you're going to have a condo association or even single family residence. You may have homeowners association dues. So that's another thing. We were talking about the taxes and insurance. We didn't add in. So
Yep.
that's another expense to take into consideration. um, Features and benefits of a home. Make a list of features and amenities that, are desirable to you, such as a number of bedrooms or bathrooms, the size of kitchen you'd be interested in, outdoor space and parking. Are you going to do you want a 2-car garage? Do you just feel like a 1-car garage would serve, you? So it's just a lot to think about. And then Daniel, I know you touched on the home inspection and, that's definitely, again, we don't have a home inspector on with us today, but, prioritizing that, I highly recommend that. Daniel, I don't know if
Yes.
you highly recommend that when you're talking with your clients, but, you know, definitely important, to get that home inspection and identify any potential issues or repairs that may need to be made. Because if that current homeowner is not going to fix those items,
Mhm.
that could be an additional expense, depending on that item that you're going to want to fix. So that's another thing to think about. And I know Daniel doesn't get into the negotiation part. That's more on your realtor side, but it's something to think about. And then where Daniel comes in is those financing options that we've kind of covered. And it sounds like he's got a plethora of things that he can do. And as we've mentioned, it's not really a one-stop shop. He finds a product that will fit you and your needs. And so that's what makes it really nice. Um, and then just future plans, is this Daniel, are you seeing a, a lot of folks coming to you? I know we're talking more about first time home buyers, but are you seeing more people looking for their forever home, or what are you, you know, when the people that you're working with now, what have they been looking for lately?
I feel like most of the hesitation that I've been getting lately is the people that are looking to upgrade to that forever home. And I think in their mind, they're thinking, oh, I don't want to move into my forever home with this 30-year interest rate. And like you mentioned earlier, that is where the refinance comes into play. If we're 2 years from now and we're going from a 7% to a 5%, we're going to refinance you to a 5% and save you that money on your monthly payments. You're not stuck there forever. And I think that's where most of the hesitation is at. And then I also have some people that I talk with that actually would benefit from doing some sort of a refinance at the moment. I know that might sound strange because we know that a lot of people in the last couple of years were getting, sub 5% interest rates, but credit card debt is at an all-time high right now. And if you have a 3% mortgage, but you're paying 24% interest on a credit card and 5 or 6% on a vehicle loan, it might make more sense for you to refinance that and take the higher mortgage rate, but have all of those credit cards or other debts that you might have paid off. So don't completely rule that out. And I have a blended interest rate model that if that might apply to you. I would love to kind of walk you through that and show you based on what you're currently paying. Here's how much you're spending on monthly payments. Whereas if we kind of pay things off with your mortgage and you take that slightly higher rate, well, you're still going to be coming out ahead because you're not spending all this extra money that's being thrown away on interest to credit card companies. Um, and then it's really, I would say after that, the refinance, people that are nervous about the rates moving forward. And then the other one is just people that are wanting to do something, but just haven't, I guess, trying to figure out what questions they need to ask to start the process. And, maybe they were turned down in the past or, turned down because business was crazy a couple years ago and people didn't, necessarily take as much time as they could have to educate somebody with bad or low credit and say, hey, here are the couple of pieces that if you pay attention to these can get you ready to buy something in 6 months or whatever it might have been. So if you're on the fence about anything like that, or you don't want to ask questions because you don't want to be told no, like, let's just have a conversation. Like, it's not, we're not making you do anything you don't want to. I'm just trying to help you get prepared to make your best financial decision.
Yeah, excellent point. And one thing you touched on, I want to go back to, which was, if you're paying on those higher interest credit cards or auto loans, those aren't tax deductible. And unfortunately, second mortgages or home equities are no longer tax deductible unless they're in first lien position. So, by tying those or refinancing your first mortgage and putting those into your home, that is tax, that debt that now that you rolled into your first mortgage is tax deductible. So the interest that you pay on that loan, so that could be also another tax credit for you. We didn't touch on that. So that's excellent point. I'm glad that you brought that up. Yes. And even buying a new car, unfortunately, there's been, tags. There's been so many different changes with the tax. Again, I will go ahead and say I'm not an accountant, so we're not trying to overstep in that area that we are not professionals in. But there's been so many changes with the laws over the last several years. I believe that changed maybe about 4 years ago now. But I bought a car and I couldn't claim the there's excess tax that you pay, and then your tags and license title fees that we used to be able to, you get your registration and how much did you pay, and you were able to deduct that on your taxes. That is no more. So it's a bummer. So excellent point that you brought that up. If you tie that into your home, you can now, that will increase that tax deduction because your interest is going to be higher that you're paying on your mortgage. So yes, excellent point. So future plans, what are your future plans? Is this for your forever home, or is it just a short term, you're young, you're starting a family, type thing? And then another thing to consider is the resale value. When you're buying your first home, it's an exciting milestone. But you also want to consider the property's resale value and look for homes in neighborhoods with strong resale potential and features that appeal to a broad range of buyers. So that it can help you resell the property if you need to. Negotiation skills. So this is something more when you're working with your real estate agent will help and negotiate on your behalf. So that'll help that process. And just the emotional, I do want to touch on this, the emotional preparedness. It's a very emotional process. It's one of the, what are the buying a home, death, starting a new job. Is there a few others you can think of? One of the most stressful events in your life?
Having a kid. Oh yeah.
Children, absolutely, absolutely. So we've named 4. There could be more, but those are 4 huge life stressors. So just that emotional preparedness, and Daniel does a great job. He's very easy to talk to, and if you have questions, he'd rather you ask. There's I'm sure no question is a dumb question. So ask all the questions and get everything you need to know out of the way so that you are fully prepared. Not that we're ever fully prepared for any of those 4 things that we've touched on, but it's just so exciting, but it's stressful. So be patient, be flexible, open-minded as you search for your dream home or your first home. And remember that it's okay. Take your time and find what fits you. And Daniel takes his time to find out what works for you as far as the financing options go. So, yeah. Remember, buying your first home is not just a financial decision, but it's a significant milestone in your life. As you embark on this exciting journey, stay informed, stay proactive, and above all, trust in your instincts. Your dream home awaits, and with the right knowledge and guidance, you will be well equipped to make it a reality. Happy house hunting, and here's to the beginning of a new chapter as a homeowner. Those of you listening, we'd love to hear your thoughts and experience on this topic. Daniel, if you'd like to share with the audience how they can connect with you.
You can visit my website. It is closingwithdaniel.com. And then also I'm going to have my Linktree linked below. That's social media, all that, cell phone number. And it is my cell phone number. I don't have an office line. So if you want to send me a text and ask a question, please do. It's like Rebecca said, this is an exciting journey. I'm here to help out and be excited with you. And if you want to send me a text and asking a question about, hey, what happens if the appraisal comes back short, or whatever happens with this or that, send me a text and let's talk about it. I get freaked out by the people that don't ask any questions during the process because there's a million things going on. So please feel free to ask me anything that you've got on your mind.
Yes. Details on how to connect with Daniel will be in the show notes. Don't forget to subscribe to this podcast for more insightful discussion. Thank you for joining us on Balance and Bottom Lines with Rebecca. Remember, the balance between personal well-being and professional success is key. Stay tuned for our next episode. Until then, keep striving for excellence in both your personal and professional life. Daniel, thank you so much.
Thanks for having me, Rebecca.